Hey guys, welcome back to Ask a CPA. Today's question comes from Nick in Granbury, Texas. Nick asks, my parents are aging and I'm taking care of them financially. Can I claim them as a dependent on my tax return? Well, hey, Nick submitted his question through our website at askacpa.co. If you have a question, accounting or tax question, you can submit it through our website. Again, that's askacpa.co. If you're new to the channel, make sure to hit that subscribe button and bell notification to be notified when new videos are released. We have some pretty great ones queued up, so make sure you are subscribed. So first, let's get started with what is a dependent. For tax purposes, a dependent is someone other than the taxpayer or spouse who qualifies to be claimed by someone else on a tax return. More generally speaking, a dependent is someone who relies on another person for financial support, such as housing, food, clothing, necessities, and more. Typically, this includes your children or other relatives, but it can also include people who aren't directly related to you. But unfortunately, you don't get to include your dog Rocco. He does not qualify. So once you identify someone as a dependent on your tax return, you're informing the IRS that you meet the requirements to claim them as a dependent. So what qualifies someone as a dependent? The IRS rules for qualifying dependents cover just about every conceivable situation, from housekeepers to emancipated offspring. It's a pretty wild list. Fortunately, most of us live simpler lives. The basic rules will cover almost everyone in every situation. Here's how it breaks down. In order for someone to qualify as a dependent, they first must meet the following criteria. Are they a U.S. citizen or resident? So the person must be a U.S. citizen, a U.S. national, a U.S. resident, or a resident of Canada or Mexico. Are you the only person claiming them as a dependent? You can't claim someone who is claimed as a dependent on another tax return who states that they are not able to be claimed as a dependent on their own tax return, or someone who claims another person as a dependent on their own tax return. This requirement commonly applies to children of divorced parents. There are certain tiebreaker rules which are found in IRS Publication 501. These rules establish income percentages and the residency requirement for claiming a child, but this is typically addressed in the divorce decree, so make sure to check your divorce decree if you are trying to claim a child as a dependent in a divorce situation. Next, are they filing a joint return? You can't claim someone who's married and files on a joint tax return. So say you support a married teenage son. If he files a joint return with his spouse, you can't claim him as a dependent. So next, there are two types of dependents, each subject to different rules. First, there's a qualifying child, and then there is a qualifying relative. So let's first take a look at the qualifying child. So to claim a qualifying child, you must be able to answer yes to all of the following questions. Are they related to you? Now, this includes your biological children, a stepchild, an eligible foster child, a brother, sister, a half-brother, half-sister, stepbrother, stepsister, or adopted child. Do they meet the age requirement? Your child must be under the age of 19 or a full-time student under the age of 24. There are no age limit for permanently or totally disabled children. Do they live with you? So your child must live with you for more than half of the year. Do you financially support them? Your child may have a job, but they cannot provide more than one half of their own support. Next, let's take a look at qualifying relatives. So many people provide support for their aging parents, but just because you mail your 78-year-old granny a check every once in a while, it doesn't mean you can claim her as a dependent on your tax return. So here's a checklist for determining whether your grandma or other relative qualifies. So first, do they live with you? Your relative must live with you at your residence all of the year, or be on a list of relatives who do not live with you per publication IRS 501. About 30 types of relatives are on this list, so make sure to check it to see if you qualify. Next, do they make less than $4,400 for tax year 2022? Your relative can't have a gross income of more than $4,400 for tax year 2022 and be claimed by you as a dependent. And finally, do you financially support them? You must provide more than 1/2 of your relative's total support each year to claim them as a dependent. In all cases, to claim someone as a dependent on your tax return, they can't be claimed as a dependent on someone else's tax return. Next, let's take a look at the type of credits that you get for having a dependent on your tax return. First, there is the child tax credit for children under the age of 17. This tax credit is currently $2,000 for each qualifying child, subject to specific income limitations. The second is a smaller tax credit for other dependents. So if you have a qualifying relative as a dependent or a child over the age of 17 claiming as a dependent on your tax return, you're entitled to claim them as a non-refundable tax credit of up to $500. Now you can claim this credit for each qualifying relative you have on your tax return. I hope you guys found this video helpful. If you did, make sure to hit that subscribe button down below, and we'll catch you on the next video. Take care.